Thank you, Thomas. In fact, you set me up nicely.
It's yours.
Thank you. Set me up nicely just to say a few words that Bench are going to be working with SMIT on an event in around Expo on October the 11th to bring some of the key people from the Moroccan government in touch with some of you. So if you're interested to find out more about the Dakhla and a few other key areas, let me know directly. Thomas alluded to it, that there's potentially a long kickback on COVID. So let's ask Philippe Doizelet, the director of Voltere by Egis, to come up and with his panel and explore some of those outcomes. Thank you, Philippe.
Hello, Matt. Thank you. Good to be here and good to have the African conference crowd being together again. It's something after almost 2 years. You know Matt, he has brilliant ideas. One is to wear colorful conference socks. The other is to set up a panel where we have operators and owners. So it's my privilege to call on stage Mr. Andrew McLachlan from Hilton. Hello, Andrew. A big applause from Andrew, please. Farhan Charaniya from CHIC. Welcome. Hamza Farooqui from Millat Investment. And our friend Ramsay Rankoussi from AHIC, Radisson. Hello. So, gentlemen, Africa. Where are we in a post-COVID situation in Africa? That's the million-dollar question. When we started to prepare the panel, we came to the conclusion that Africa is complicated after COVID. But believe me, Africa was already complicated before, in many ways. 2 words of geography. If you put aside the two extremes, Morocco to the north and South Africa to the south with reasonably sized domestic market, all African economies depend either on commodities, either on tourism. So the models are pretty fragmented. In that frame, the hotel scene in Africa has many barriers to entry still. So I can ask investors and in particular investors active in complex countries like DRC to witness on the main obstacle they have encountered when it was the time to invest in a country and enter the market.
Yeah, so I mean, Congo is dependent on minerals. Out of 31 minerals in the world, 28 are found in DRC. So copper and cobalt is the main mining mineral in DRC. So over the past 2 years, 70% of the cobalt around the world has been mined in DRC. So we have seen a lot of change, a lot of domestic growth, a lot of new hotels coming up. We are doing 3 hotels with the core. Hilton is coming up with 2 properties as well. So there's a lot of political stability as well now, so which has helped us to grow and to take the project ahead.
So what you're saying is, despite the market may not sound sexy in the first instance, you have massive demand resulting in extraction project, mining or oil development in several countries, because you're not limited to DRC. You have other countries you consider for development.
Correct. So even in Angola, we have been from past 30 years, which is also a critical market. We have seen over the last 8 to 10 years, Angola has been facing a lot of issues in terms of political instability and currency devaluation. But the market is coming up quite well from last 2 years, and we see a lot of opportunity there as well. That's on our list in the upcoming 5 years, and we're looking at few projects there as well. But COVID has never created any issue in Africa. As we know, we have doubled our business in other industries, and it's going quite well. And even political stability has helped us to grow really well, and the support which has been provided by the political community around. So we're looking to more countries and more developments.
Okay. Still on Central Africa, Andrew, that I know that we've been exploring jointly with you, but also with some other brands, opportunities in Cameroon. That is not an easy country. What would you say about the barrier to entry? How complex it is to set up a project, and how does it take to make it successful?
So I think not just in Central Africa, but across Africa, the barrier to entry is different in every country. So going back to the DRC, which has got a lot of activity now, the barrier of entry to get into the DRC, to find the right owner class to work with is difficult and can take a lot of time. But once you're able to sort of crack the nut and get into that market, then there's actually a lot of opportunity. So if we take Cameroon as an example, we've been in Cameroon, fortunately, for over 30 years. So we have a very successful Hilton, which operates in Yaoundé. And this week, we actually announced a DoubleTree by Hilton in Douala. And we've seen that now we're active in that market. There's a lot of opportunity. And COVID hasn't really sort of slowed down sort of development opportunity. It has, or the aspiration to do new hotels, because there's still a glaring sort of supply of quality hotels. But what COVID did do is it made it quite difficult to move projects along. You're dealing with owners who want to see you, they want to touch you, they want to interact with you, and trying to do digital workshops, digital negotiations has been difficult. But there's still a lot of opportunity in most of the typical countries which have a strong economic demand and an undersupply of quality hotels.
Yeah, so it takes longer, it takes hard work, but at the end of the day, you're rewarded, and you can manage to develop projects in a reasonable time frame. Ramsay, how about you? What's your view about the barriers to entry and the development schedule? What was the key factor of success?
Sure, but I mean, if we look at complexities as the theme of what you're asking, I think it's not only on the investment side or the development side of any of those countries. I think one of the biggest challenges in Africa is human talent. And that is one of the things that we have all a common responsibility towards the industry in terms of creating jobs, and obviously creating employment is one of the largest employer across the continent, but also is one of where you have the most shortage of skilled talent. So obviously we all have this commitment in terms of training locally, but the same skill set in terms of shortage will be found in terms of professional consultants on the construction side, meaning access to professionals from the design stage to architectural firms, to anything locally that you can have access. So those are challenges, but you can add up other challenges that you will find in other countries, from access to raw material, red tape. I think red tape in Africa is probably one of the biggest challenge. When you look at creating an investment climate where people can come and invest, is by creating, ease of doing business. So the classification of ease of doing business is certainly more challenging in certain countries in Africa. And those all elements, regardless of what you have seen today in terms of funding, access to funding, those are common challenges. But those are fundamentals, and those often are linked to public sectors.
Hamza, how long it takes to develop a project in Africa, from your past experience in developing project, in investing in project?
So I think, from our standpoint as a family office, asset ownerships like hotels are long-term patient capital drivers, which unfortunately is a challenge in South Africa, in the rest of Africa. You have owners who aren't specifically sophisticated; they are single asset owners, and I think that's historically been a challenge. But I think it's going to be a greater challenge post-COVID, because the ownership style is changing. The days of owners just having an asset and being sort of fairly distant is gone. The time is for owners to be hands-on, understanding what's going on, understanding what's going with their sort of capital. Lenders are becoming super sophisticated. They are demanding more. So I think it's been challenging in Africa. I think it's going to be even more challenging. I also think that the recovery in Africa is going to become more complex because if you look at the rest of the world, they're vaccinated a lot faster. I think Africa is going to be slower. That being said, there's also pockets of opportunity. We are doing more in South Africa this year. We are, carving out unique opportunities. But I think the environment of today sets a whole new tone, a whole new reset on the relationship, on the industry. There is a significant need to be super efficient. And I think if those pieces come together, then Africa, as probably the most underserved and underrepresented continent in the sector, can, I think, be a significant driver over the coming years.
Yes, this is a very strong point because if you put us completely aside tourism that is special, you have a clear link between hotel development and GDP growth. And in most African countries, you have a strong GDP growth pulled by, we said, commodities, but also by demographics, and with a virtuous cycle that generates influx of investment and capital, and then banking, and that is pretty new. Although one of the key points we had this conversation, and back to you, gentlemen, is the financing that remain a very critical issue. Would you say that the financing situation is more critical post-COVID than it was before? And how do you foresee the evolution of financing in the region on a short-term lap? Ramsay?
Yeah, sure. No, I mean, financing has always been the biggest challenge across Africa, and that's because cost of capital. So obviously, acquiring local debt is extremely expensive. So often people that are not local will come from outside and then be endorsed with a local sponsor. But those are the structure that you need. So then you have a lot of development banks that might be more keen and interested of doing so. But you will see now, because of COVID, probably somehow a withdrawal from local commercial banks, and that because tourism has been perceived as a risk. But again, we need to take back what I was telling you before, which I think COVID has demonstrated one thing, which was for the investor community, a preservation of cash flow, but for us, is also preservation of jobs. And that's where funding is also coming in place. It's not only in terms of creating new jobs or creating new hotels, it's the ability also to preserve the existing one. And that is what also needs to be happening post-COVID, is what we all expect about this trust, but also how do we create funding in terms of working capital so some of the existing assets can continue to run and we can continue to also provide employment.
My next question will be more centered on the owners. In Africa, the profile of owners is very different from the one you know from the Middle East region, right? Could you please describe this owner's profile and what it means in terms of owners and investor relationship?
I mean, a lot of owners are first-time developers of hotels across Africa, and they really don't know what the hospitality market is all about. So if I say a brand needs to take an extra mile in Africa to explain them, because if we see across Africa, average to finish a project is 9 years, which is quite long. And I think so it's a bit of understanding which has to be between the owner as well as the brand to take it to a next level. And we see a lot of projects which are signed but take a very long time to finish, and then it's on board that it's signed, but then we see that it's taking quite a long time. So I think so that even the brands have to take an extra mile wherein they give the right consultants to the owners from the first day, so that it's much more easier, it's much more faster, and we are here to develop industry, so that's very important to train or to educate each other and take it further.
So I think, Philippe, just to sort of add on that, I think from an owner class in Africa, you've really got extremes. You're dealing with sheikhs and chiefs on one end, and government pension funds or an actual government institution on the other. And how you communicate to those two owner classes is very, very different.
Yeah.
Where a chief is a hands-on, he's got 3 or 4 cell phones, he's got a trading business, he makes decisions, he doesn't understand that there's structure and there's reporting that needs to happen. He wants to make a decision ASAP. And then you've got a government pension fund where you don't really sometimes know who you're talking to. It almost goes into sort of a black hole. And both of them need time and education on process, and there's a time to plan, and there's a time to do. And so you do spend, I think, prior to sort of concluding your contract, you might spend a couple of months really educating that owner class on how you should actually set up your hotel program before you even conclude the agreement with Hilton or Radisson or whatever it is, and before you break ground. Yeah. And then post opening is those first 2 years of how engaged you are, again educating the owner once the hotel is open, what that relationship is going to be between you and the owner from a relationship point of view.
What you're saying in brief is that there's some kind of over expectation from owners on what the operators could provide. For instance, they might expect that the technical service agreement supersedes a project management that is, whereas it is totally different.
Yeah, so there's a lot of time and energy spent on explanation as to what is the role of the operator.
So how could we? I'm talking to you. How could we make things better? How could we have a more fluid relationship between during the construction phase? I mean.
So I wouldn't agree with some of the things which have been sort of, and that's just purely from experience. I have a view that when it's come to Africa, I think the brands have had a seriously arrogant view. They've had a view that sort of will just take in and get in with whatever works. And I think the brands have been hugely inefficient. They have created huge clustering corporate offices, and frankly, that's got to change. The fact owners today are not going to deploy capital if brands are simply going to come and say, these are my consultants, and work with them. Because frankly, half these consultants are either aligned to certain procurement companies, they're aligned to certain brands, and if Africa is to grow, that culture needs to change. The brands need to be super agile, super flexible, and you can't just say, well, I'm going to coach the owner how to own a hotel. Well, if he doesn't know how to own a hotel, he shouldn't be in the asset class in the first place. And that's precisely why lenders in Africa don't like hotels, because there's been this string of mismatched risk alignment, mismatched execution, and that's why it takes 9 years. So I think there's a need for a serious look. I think it's coming. The fact that owners today are asking for more franchises says there's been a significant failure on the parts of the brands to actually manage efficiently. So I think change is coming. I think owners are becoming super educated, and I think owners have always had access to great asset managers. They've had access to all of these things. But I think the most underserved continent is going to go through a wind of change. And I think the quicker the brands understand that culture needs to change, the culture of being super efficient, accessible. These are not trophy assets. These are assets which need to generate cash flow. And the quicker the industry understands that, the quicker the brands understand the need to be agile, accessible, I think there will be a serious proliferation of sort of capital. Because that capital pool is available. So I think that's hopefully where things will head to in an efficient environment.
Okay, this is a perfect transition to my next
just one
set
comment,
of questions, unless you have a further comment.
Yeah, I mean, I agree with him, and I think COVID will certainly accelerate those discussions between owners and operator. And I think what we have learned from COVID is being extremely transparent and communicating with owners. And he's totally right in the observation that owners now are getting more involved because, yes, they have seen what the risk would be and the downside. Well, we need to also come back in place in regards to some of the risk that you've seen inherently across Africa is valuation of some of the construction that has been done over the past. When you look at some of the projects that are over-spec'd, over-expensive in terms of the construction cost itself, from the beginning, this is not a viable project. And financially, they still obtain a loan, but this is really a run to a distress or or a situation where eventually you will get this tension between an owner and operator. But that is from the default of starting from the beginning, even before starting the construction, because the property was not financially viable. And that's because there are many different reasons of why this has been established, because of, overvaluation, because of, willingness to take capital outside of the property. And that's where, again, coming back to the skill set of having professionals, having feasibility, but having a clear understanding of how much should be the maximum cost of a property.
Yeah, no, clear. So I got two points from you, gentlemen. Number one is let's not get blinded by the post-COVID situation. Let's anticipate the needs of Africa and for hospitality in the future. And clearly there are opportunities ahead, and that's what I want to talk with you now. One of the points that is very frequently discussed is domestic travel. Everybody's talking about domestic travel, or in the case of Africa, regional travel, sub-regional travel, name it. But how do you anticipate this will to have an impact on the brand development and on the way you will develop hotel in the subcontinent? Andrew?
So I think if we look at because of COVID, we've got a very clear sort of brand strategy per brand, and some of it addresses domestic travel. So we would look at Hampton by Hilton and Hilton Garden Inn, which are both sort of focused service brands, very sort of lean in their back of house, sort of set up very sort of small sort of area programs, and we see those brands really sort of focusing on markets which have domestic tourism and have scalability. So South Africa is a market where we see there's a real opportunity to introduce Hampton by Hilton and to continue to grow our Hilton Garden Inn presence. Nigeria is a market that has scalability, where Hilton Garden Inn is a brand that we see a lot of scalability. And Nigeria, surprisingly, even during COVID, because it has such a large domestic population, it was still able to function relatively sort of successfully. And we've got the same in some pockets of East Africa, where, again, Hilton Garden Inn will be the brand that we see having that scalability and sort of addressing the sort of the domestic market.
Yeah.
We've also have introduced Embassy Suites as a product, which is an all-suite brand really targeting the long stay, which we've seen has been in sort of high demand, and we see that there's a lot of opportunity for that brand to go into specific markets in Africa, and it's actually following a lot of the natural resource sector, where you've got customers that are going to be in a market for a longer period of time.
Okay, so clearly the market widens with the enter of the mid-market segment and the extended stay segment, but also in terms of development, we had some conversation about conversion. It's another way to develop hotels. I think one of the investors had some views on conversions.
Yeah, I mean, we've we in a COVID climate reflagged, rebranded, sort of redid rooms and got that done in 9 months. I'm a great believer in conversions because I think you bring on stream quicker and you're in a much stronger position. We've just introduced a Hyatt House for the first time in Africa. We're launching 2 of them, and those are conversion projects. I think just with the kind of supply distress and the ability to sort of reconfigure and rework, we are great believers that there's a lot of conversion opportunity. And I think the brands are also becoming a little bit more flexible. There was this sort of matrix many years ago that certain brands are conversion brands. I think owners are also understanding that PIPs can be customized. Brands are also understanding that certain guest touch points are vital. And I think where there's a shared interest to make that work, I think conversions work very well. But again, there's a significant need for alignment. There's a significant need for understanding that shared interest. From the same page, there's a significant need for transparency. And when those things come together, the relationship can, I think, produce great results. I'm still a great believer in brand managed, because I think if the brand can't manage and sort of execute their brands, then who can? Why must I pay a third-party manager? So I'm still a great believer that the brands can get it right, they will get it right, and I think they have a real intent to get it right. And maybe that will change with growing sophistication, but conversions, I think, is a great growth opportunity for ownership, and I think for the brands, and I think we'll see more of that in the coming years.
Very good.
I think just to add on to that, I think because of COVID, the entire market went to ground zero. So all existing hotels, when they had to reopen, that weren't branded, are suddenly realizing they don't have the same distribution channels, they don't have the same marketing ability. So suddenly there's a much higher demand for conversions. So hotels and hotel owners that were never going to discuss a conversation with a brand, be it on a management or franchise basis, are now saying, I actually I need help, I need you to come in and actually assist me in relaunching my 20-year-old hotel back into the marketplace.
Yeah. No, I like the idea. I mean, we clearly have a market that's remained complex still, no question, but where opportunities arise again with a new game, conversions, new segments capable to emerge. Talking about destination development hot picks, what are your favorites, and what are the countries, city where you would like to put a flag in the coming months or years?
Just pick up and just coming back as a conclusion also on what you mentioned before, because I just want to give a careful statement when you speak about domestic tourism. Because domestic tourism has been extremely strong because of COVID. But when you look at Africa, domestic tourism is related to the growth of middle class. And not every country in Africa has a rise of middle class. The middle class is the consumer of hospitality product. So you need to have this fundamental before you can speak about domestic tourism in some of the countries in Africa. But what has been seen, coming back to your question, is the shift in behavior of conversion, but also the shift of behavior in terms of leisure, driven by domestic or international demand. And leisure and resorts is certainly something we see. So for us, in terms of coming back to your question, in terms of where do we see growing further, I think we certainly want to start and choosing further leisure offerings. I think this year we have signed almost 15 hotels, which 50% of them were conversion, and 50% of them were actually resort offerings. So that shows where
That's
we go.
impressive.
And in terms of destination, I think you have heard it from the others today, but Morocco has played big for us this year. Egypt will certainly continue. Southern Africa, I think West Africa will certainly want to grow further in terms of Cameroon, as has been mentioned, Ivory Coast, Senegal, and others. And then East Africa will hopefully wish to enter in Tanzania.
Yeah. So your appetite remains
Strong.
big for Africa.
I think from my standpoint, we are super focused on South Africa, because I think from an ownership standpoint, owners end up making this mistake. They get distracted very quickly. We're a very strange breed. We make one thing successful, and then we think we can do it 10 times. So for us, distraction is the biggest cause of failure. We're super focused on South Africa. There's lots of destination opportunities. We own a significant flagship in Cape Town. Cape Town, is going to be a key destination from an inter-Africa perspective. It's got a very strong European feel. It's known as the French Riviera of Africa. So we see significant growth there. We also see significant growth on the sort of safari side, because a lot of the branded guys haven't figured out, how do I enter this market? And I think with the growth of leisure, that's going to be something where there's going to be growing demand. And if someone can get the cost and the delivery matrix right, that's going to be something which you can piece together. We have historically owned golf resorts, which are complex assets to own. We've owned them with a brand, and we've seen successes and failure. So I think from our standpoint, South Africa, which is our core market, there's a lot to do. It's also the most mature market on the continent, and it's a very important demand driver. But lots of opportunity, and I think if you get the fundamentals right, there's only more further value add you can bring to the destination and the opportunity.
How about you?
We see a lot of opportunity in DRC for sure. A lot of unbranded hotels, new branded hotels coming up. We also see a lot of opportunity in Angola. Very few branded hotels, and the market is coming up. We also looking at opportunities in Zanzibar, which is a hot destination and a good amount of occupancy and a lot of EU travelers coming in. And the other thing, just to add to Ramsay and Hamza, is that branded hotels should look to manage the properties, because it also trains the local community and gives them confidence to enter a new industry. So yeah, it's really good to do that as well.
Andrew?
So I think we've got two focuses. There's markets that we don't have a presence in at the moment, which we are working hard to break into. So Dakar in Senegal, Abidjan in the Ivory Coast are two key markets from a West African point of view. We want to grow our presence in Angola, and we also want to enter Tanzania from a business and leisure point of view. And then in markets where we already have a presence, it's really to have scalability in certain cities. So like Hamza said, Cape Town is a market that has scalability. We have 11 brands that we can use in Africa. Cape Town is a city potentially that has the ability to have all 11 brands in that city. So scalability in Cape Town, Johannesburg, Nairobi, and Nigeria would be the markets where we see real scalability, and others are where we want to make sure that we continue to offer our Hilton brands of hospitality in cities where we have customers that are going to that are in need of a good quality Hilton.
Thank you, Andrew. We have 30 seconds, so if somebody has a question, that would be a pleasure. So we have been clear, it looks like. So let me thank you, this very knowledgeable panel about all over Africa. Thank you, gentlemen, for your insight. It was fascinating. Thank you.
Thank you.
Thanks. Thank you, Philippe. Thank you, gentlemen. Thank you, chaps. A really nice balanced panel that for discussion on that recovery.